This episode was produced using AI-generated voices and scripting. Okay, so here's what's bugging me. Zuckerberg spent all of 2024 telling everyone Meta was an AI company now. New identity, new mission, the whole rebrand energy. And then the actual move, the thing that makes it real, is just firing people. That's the transformation?
That's not what's happening. I mean, on the surface, sure. It looks like a cost-cutting round dressed up in strategy language. But the timing and the structure of this are really specific. They're targeting the lowest performing 10%. This isn't a blunt force layoff like 2022 where they just ripped out entire divisions.
Starting in May. So people are just sitting there right now, knowing it's coming.
Right. And that's actually the cruel efficiency of it. They've already done the performance reviews. Managers have been told to identify underperformers. So the list functionally exists. You're either on it or you're not, and you probably already know.
That's grim.
It is grim, but here's the thing nobody's saying. This is arguably better than what most companies do. Most big tech layoffs hit entire teams. Whole projects get axed. People who are doing great work get swept up because their division got cut. This is Meta saying we're keeping the structure, we're keeping the teams, we're just removing the bottom tier within them.
Okay, but hang on. Lowest performers. Who decides that? Some manager who might just not like you? Some stack ranking system that's been broken since Microsoft made it famous in the 90s?
Oh, 100%. And Meta uses a system it's basically forced distribution. You have to put a certain percentage of your team in the bottom bucket, whether or not anyone on your team actually belongs there. So yeah, some of these people aren't actually bad at their jobs. They're just the least best on a strong team.
Which, honestly,
Yeah, it's a known flaw, but from Zuckerberg's perspective, the math works. You shed 10% of payroll, and at Meta scale, that's somewhere around 7,000 people, and you redirect that capital into infrastructure spending, GPU clusters, data centers, the actual hardware backbone of AI.
7,000 people. Let's sit with that number for a second.
It's massive, and it comes after they already cut 21,000 jobs across 2022 and 2023. So if you're counting, Meta has shed or is about to shed roughly 28,000 roles in 3 years.
And the stock is at all-time highs.
And the stock is at all-time highs, which tells you everything about what investors actually value. They don't want headcount. They want capital allocation toward AI infrastructure. Every employee cut is basically a signal that says, we're spending this on GPUs instead.
So the contrarian read here is that the layoffs aren't a sign of weakness. They're a flex.
They're absolutely a flex. Zuckerberg is essentially telling the market, I can run this company leaner and still accelerate AI spending. The 2025 CapEx guidance is somewhere in the range of $60 to $65 billion. That is an insane number. And Wall Street loves it because it's going to servers and chips, not to salary.
Wait, seriously? 60 to 65 billion in capital expenditures?
That's the range they've signaled, and that's up dramatically from prior years. So when people frame this as Meta is struggling or Meta is cutting costs, no, Meta is restructuring its cost base. The total spend is going up, it's just going to different line items.
Okay, that's the part nobody talks about. The headline says layoffs and everyone's brain goes to company in trouble. But the actual story is the money's moving, not disappearing.
Exactly that.
So who should be nervous? Not the people at Meta. I mean, they should obviously be nervous. But competitively, who looks at this and goes, oh no?
Google. Honestly, Google should be watching this very carefully because Meta is doing something Google culturally cannot do, which is aggressively trim headcount to fund a single strategic bet. Google's still trying to do everything. They've got Search, Cloud, Waymo, DeepMind, YouTube, a dozen priority one initiatives. Meta's just going, it's AI, everything else is in service of AI, and if you're not contributing to that, goodbye.
I mean, it's cold, but there's a clarity to it.
There's a brutal clarity to it. And look, Zuckerberg has earned a certain amount of credibility on these pivots. Everyone mocked him for the metaverse spending. But while people were laughing at the legless avatars, Meta was quietly building one of the largest AI research organizations in the world. Llama is open source and is legitimately competitive with what OpenAI and Google are putting out.
You think the metaverse detour actually helped?
I think the metaverse spending built infrastructure that turned out to be useful for AI. The massive GPU clusters they bought for rendering virtual worlds, Turns out those are exactly what you need for training large language models. It was accidentally prescient.
Or he's just retconning the narrative.
Maybe, but the hardware doesn't care about the narrative. The hardware exists, and now it's being repurposed.
Okay, so here's where I push back though. You're painting this as some strategic masterstroke, but isn't there a version where cutting 10% of your workforce is it's just a company that hired too many people during the pandemic and is still correcting for that?
Of course there is. And that's partially true. Meta went on a hiring binge in 2020 and 2021 like everybody else. They overhired. The first round of layoffs in 2022 was clearly a correction for that. But we're now 3 years past that. If this was still just correcting pandemic overhiring, it would have been done by now.
So what is it then?
It's a permanent operational philosophy change. Zuckerberg has said, and I think he actually means it, that AI is going to allow Meta to operate with fewer people doing more work. He's not just cutting to cut. He's betting that AI tools internally will make the remaining 90% more productive than the full 100% was before.
That's the whole game right there. He's using AI to justify cutting the people who would have built AI.
Well, not exactly. The AI researchers and engineers are mostly safe. It's the support roles, the middle management layers, the teams that were adjacent to core product but not driving it. And nobody's saying this, but there's a real signal in who gets cut. If your role could be partially automated by a large language model, you're in the crosshair.
So Meta's basically doing the thing everyone's been warning AI would do, replacing jobs, but they're doing it to their own employees first.
Before anyone else does it to them. Yeah.
Who does that actually help though? Like, the remaining employees are going to be terrified. Morale's going to be.
Morale is already bad. That's the thing. When you announce layoffs weeks in advance, you create this extended period of uncertainty where everyone's productivity drops because they're all refreshing their email waiting for the meeting invite that ends their career. It's a terrible way to manage people.
But Meta keeps doing it this way.
Because Zuckerberg has decided that the strategic signaling to investors is worth the short-term morale hit. He wants the market to see him making hard decisions publicly. It's performance. Effective, but also performative.
Okay, let me come at this from a different angle. You mentioned the CapEx number, 60 to 65 billion. Where is that money actually going? Like, physically going?
Data centers primarily. Ed has been building out massive AI-optimized data centers. They're buying NVIDIA GPUs at enormous scale. They're also investing in custom silicon, their own chips designed specifically for inference workloads, which is the part of AI that actually serves users in real time. Training gets all the attention, but inference is where the ongoing cost is.
And that's what makes the layoffs make sense financially. You're swapping recurring personnel costs for capital investment that theoretically has a longer useful life.
Now you're thinking like a CFO. A GPU cluster depreciates, but it doesn't need health insurance. It doesn't take PTO, and it scales in a way humans can't.
That's dark.
It's dark and it's true, and every major tech company is doing this calculation right now. Meta's just the most explicit about it.
So wait, you said earlier this is a flex? That it signals strength? But isn't there a bear case? Like, what if the AI spending doesn't pay off? What if Llama doesn't become a platform? You've cut all these people and spent all this money and.
That's the risk, and it's a real one. The actual number is something like Meta's core advertising business still generates the vast majority of revenue. If you spend $65 billion on AI infrastructure, and the primary use case for the next 2 years is still just making ad targeting slightly better, that's a terrible return on investment.
Slightly better ad targeting. $65 billion.
I mean, that's reductive, but yeah. The near-term revenue impact of all this AI investment is incremental improvements to the existing ad machine. The transformational stuff, AI agents, AI-generated content, new product categories, that's still speculative.
Okay, but hang on. You said something earlier about Google not being able to do what Meta's doing. But Google's spending huge on AI too. They just announced.
Google's spending is spread across way more surface area. They have to defend search, build Gemini, run Google Cloud, maintain Android. The strategic focus is diffuse. Meta has the advantage of being basically a two-product company. You got the family of apps, Facebook, Instagram, WhatsApp, and then you've got the AI bet. That's it. That simplicity lets Zuckerberg make these really aggressive reallocation moves.
And the board just lets him do it.
He controls the board, dual-class share structure. He has voting control. There's no activist investor who can show up and say, stop spending on AI. That's the thing about Meta that people forget. It's basically a dictatorship with a stock ticker.
Come on.
I'm serious. For better or worse, the company does what Zuckerberg wants. And right now, he wants to build an AI first company. The layoffs, the capex, the llama releases, the AI assistant integration across every app, it's all one coherent strategy being executed by someone with unchecked authority.
Which is either brilliant or terrifying, depending on whether he's right.
Exactly. And honestly, his track record is mixed. The Instagram acquisition, genius. The metaverse pivot, still unclear. The 2022 layoffs ended up being great for the stock. So this could go either way.
Let me bring up something that's been bugging me. The framing of this as lowest performers. There's something really insidious about that language, because it implies these people deserved it. It gives the company moral cover.
No, actually, it's the opposite of what it sounds like. It's not moral cover, it's legal cover. If you frame layoffs as performance-based rather than position elimination, you have different obligations. The severance structure changes. The potential for wrongful termination claims changes.
So it's a legal strategy disguised as a meritocracy argument.
In part, yes. And nobody's saying this, but the lowest performers framing also serves a recruitment purpose. It tells top talent at other companies, we only keep the best. Come work here. It's a weirdly effective recruiting message wrapped in a layoff announcement.
That's cold-blooded.
Welcome to Big Tech in 2025.
Okay, so let's talk about what this means for the broader market. Because Meta's not the only company doing this. Microsoft, Amazon, Google, everyone's been doing rolling layoffs. Is this just the new normal?
It's the new normal for a specific reason that most people aren't connecting. The interest rate environment of 2020 to 2021 incentivized hiring because money was free. You could hire 1,000 engineers and not worry about the burn because capital was cheap. Now capital has a real cost again, and companies are being forced to justify every dollar of headcount against the alternative use of that dollar.
And the alternative use is AI infrastructure.
Every time. That's the competition now. It's not, should we hire this person or not? It's, should we hire this person or buy more compute? And compute is winning that argument at every major tech company.
So people are being laid off not because they did something wrong, but because a GPU is a better use of their salary.
Bluntly, yes. The actual number is roughly an average Meta employee's fully loaded cost, salary plus benefits plus stock, is probably in the range of 300 to 400,000 per year. For that same money, you can run a meaningful amount of inference compute.
Okay, so multiply that by 7,000 people.
You're looking at somewhere north of $2 billion in annual savings just from the headcount reduction. And that money flows directly into the capex budget. It's not even a close call from a purely financial perspective.
$2 billion just freed up to buy chips.
To buy chips and build data centers. And here's the kicker. It also improves operating margins, which makes the stock go up, which makes Zuckerberg's net worth go up, which gives him more credibility with the board he already controls. It's a self-reinforcing loop.
That's the whole game right there. The flywheel of AI-era capitalism is fire people, buy GPUs, stock goes up, repeat.
I mean, that's a bleak way to put it, but I can't argue with the mechanic.
Let me ask you this, though. Is there a ceiling? Like, at some point, you can't keep cutting people and buying servers. You need humans to actually build the products.
That's the real question. And I think Zuckerberg genuinely believes the ceiling is much further out than most people think. He's betting that AI coding tools, AI design tools, AI project management, all of it is going to dramatically increase per employee output. So you don't need 10,000 engineers when 3,000 with AI tools can do the same work.
Has anyone actually proven that at scale, though? Like, is there evidence?
Not really. Not at meta scale. There are productivity studies, but they're all small sample size or self-reported. The honest answer is nobody knows yet. Meta's making a massive bet that it's true.
A $65 billion bet.
With 7,000 people's livelihoods on top of it. Yeah.
And if he's wrong?
If he's wrong, he's got enough cash flow from ads to survive being wrong. That's the luxury of having a business that prints 30, 40 billion a year in free cash flow. You can afford to make big bets and be wrong on some of them. The metaverse was that. This might be too, but the downside is capped in a way that it wouldn't be for a smaller company.
So Meta can afford to be wrong. That's weirdly the most bullish thing you've said.
It's the most honest thing I've said. The bearish case for Meta isn't they'll go bankrupt. It's they'll waste a lot of money and the stock will underperform for a few years. That's very different from an existential risk.
Okay, but for the 7,000 people who are about to lose their jobs in May, the existential risk is pretty personal.
Of course. And that's the part that gets lost in all this strategic analysis. These are real people with mortgages and families, and like I've been in rooms where these decisions get made. The spreadsheet doesn't have feelings. The people on the spreadsheet do.
Yeah,
But that's always been true of capitalism. What's new is the speed and the scale and the fact that the replacement isn't another human somewhere else. It's a machine. That's what makes this moment different from every previous layoff cycle.
the replacement isn't another human. That might be the sentence of the decade.
And we're only in the opening chapter. If Meta pulls this off, if they actually demonstrate that you can run a $3.7 trillion company with dramatically fewer people by leveraging AI, every other CEO on the planet is going to follow that playbook.
Which makes this not really a meta story. It's a.
It's a labor market story. It's an economy story. Meta's just going first because Zuckerberg doesn't have to ask permission.
The dictatorship with a stock ticker. You said that earlier and I laughed, but it's actually the key to the whole thing.
It is. Every other CEO has to navigate boards and shareholders and public pressure. Zuckerberg just decides. And that speed of decision making is either Meta's greatest asset or its greatest vulnerability, depending entirely on whether his instincts are right.
Heads, he's a visionary. Tails, he's a cautionary tale.
Basically, yeah. And right now, the market's betting heads. Hard.
Which is why the stock doesn't flinch when he announces 7,000 layoffs.
Doesn't flinch. Might even go up because the market has fully internalized that fewer employees plus more AI spending equals higher future earnings. Whether that equation is actually true is a different question entirely.
One we probably won't know the answer to for another 2 or 3 years.
At least. And by then, if he's wrong, he'll already be on to the next thing. That's the Zuckerberg pattern. Move fast, break things, deal with the consequences later.
Only now the things being broken are people's careers.
Yeah, that part hasn't changed. It's just gotten more efficient.